Hi everyone, this is Manoj here, and this is the weekend of the 6th of April. And this Sunday, and somewhere in the middle of the day, and it's time that I analyze what the market is doing. We've had a serious situation in the market with Trump coming up with these reciprocal tariffs, and it's disrupted the entire charts. And we're seeing that the technicals don't work. Uh, well, to tell you the fact, the technicals do work, but they don't work on the shorter time frames, and they start working on the bigger time frames. That's the understanding that we need to take. Technicals don't never work. The only thing is, because the market has expanded, it's moving out of a range. For a moment, it's moved out of a range that it was trading for in a very long time. And if it breaks out on a higher time frame. And that's what really is what you're seeing at the current point of time. And we need to look at it in that perspective. We generally should not panic because this is normal course in the market. If it's been moving in a certain range for a long time, it is bound to give you a volatile move once it moves out of a larger consolidation phase. So we're going to look at the market with no panic in mind, but just to understand what the charts are telling us. It's very simple. We as followers of technical analysis need to understand that everything, every panic, every fear, every moment when there's a huge amount of buoyancy in the market and there's huge amount of optimism or a huge amount of pessimism in the market is going to be met with some kind of move out of that particular state, and that's when these violent moves take place. So we're really going to check on the chart on a higher time frame and see what the charts are telling us and find reasons to move forward. That's what I'm going to do in this video. With that said, let's go on to the charts and try and figure out what we are doing. So I'm going to talk about the US markets right now because they are the ones that have really moved, and the repercussions of the move in those markets will be reflected on other markets. So I trade in the Indian markets and the US markets both. But because the cues are being driven by the US news and the sanctions by Trump and the reciprocal tariff news by the US, we will look at that chart first and then probably try to find what's happening there. There's a huge change in things in the way that trade is going to go forward with what these new changes are, and markets may not move in sync. So I'm not trying to say here that the US is going to move and then the local markets in India are going to move in the same sync. This is the focus on the US markets alone in this particular video. I'll talk about what happens in the Indian context in another video. So with that said, I'm going to take you to the charts and we're going to analyze on the monthly charts, maybe quarterly, monthly, and weekly, and try to find out what's happening and what is something that we can foresee happening in the immediate week in the month, that is next week in April, that is the month. And then given the moves, what else can we expect for the scenarios, say from May, June, July, is the perspective that I'm trying to build in this video. So it's not a short-term reading. This is a reading which stretches from a week to a month and then to the entire quarter that we're going to look at starting April. So hang on, let's get into the dive into the charts and see how it goes from there. So this is a chart of the NQ E-mini futures. Why the futures is because where I see the actual trades happening, and I always like to, look at charts where the trades have happened because they will take care of all emotions that the traders put up in the flurry of whatever trading that they do. And this is what you see here. So on the first side, what I see is we have actually on the monthly come to a situation where we are moving sideways. So to give me a sideways view of what's happening, I always choose the first level from where the last breakout happened and to the current position. So this is where I see, and I use my volume profile tool to give me some kind of an understanding on the volume, because volume represents everything that the market does. Whatever happens on the chart without the lack volume associated with that price move will not tell you much. So what we see here is we are actually in a sideways move here. And what you see here on the monthly are these two averages, the 200 and the 100. These are the two averages, the 100 and the 200 exponential moving averages that I also use to give me some impression on as to what's happening. So we look at it in a higher perspective and a broader perspective, but let's go to this and see So essentially what has happened is we have come down to the lows that the market broke out. Uh, you know, actually it was high from where the market broke out in the first week of February, and we've come down to test that level on the monthly time frame. That's what we're seeing. So there's no need reason to panic. It's a normal move. The market broke out at this level here first, right? And then it took a second breakout at this level, which is what we're seeing right now. Currently, what we're seeing. So this is a normal breakout, nothing to panic until this particular point breaks down, because even if it breaks down, no problem. Now imagine this. What happens usually is in this equilibrium phase. So this is nothing else but a value area, in which is the balance of everything that was traded between the 1st of February to date. So what did you see here? What we saw here is that the market moved out of a balance for this particular period. So what is this period? This period was, let's bring it down to this particular thing, and for a part of the month of March. So from November 1st a week to about, I mean, this is a monthly chart, so cannot say first, but part of November and part of March, we remained outside of this sideways move on the upper extremity. Now, as a thumb rule, and with the understanding of the bell curve, what normally happens is whenever you move out of a particular, uh, standard deviation, which is standard deviation 1, when you move out of a standard deviation 1 on one side, with the understanding that when the pendulum moves out to this particular move here, the pendulum will always try and move to the other side in somewhat similar area. So what do I expect here? Let me just break it down for you to make it easier for you. So consider this as the center point, and which is the pendulum. Okay, so I'm going to use this particular line here to give you the shape of a pendulum. Okay, and let's bring a circle here and make this as a circle. Now imagine this being a pendulum. What happens is that this is a pendulum that will move from here to here and back. Okay, so this is what the understanding is. So when your pendulum will move, this is the extremity of the pendulum on this side. What do you expect the pendulum to do? The next time the pendulum moves down, it is expected to move in a similar fashion down to this point. And that's what we are trying to do by getting to this particular area. Now what is happening here is we are expecting this particular pendulum move to now come, and let me grab hold of it. Can I grab hold of it? Oh yeah, that's it. So this is what I'm expecting. So this is the line on the bottom end that we could come down to. With this understanding on the monthly, what are we getting at? We're getting at this as the possible area which the pendulum can bring us down to, which is 15,752. Now you need to understand the nature of the move. The nature of the move is that it will swing in this fashion. This is the pendulum. The movement that you see is going to be in this fashion. This is the law of nature, and nothing can change the law of nature as you understand. So this is what you can be expecting for the price to do. Let me just draw it, make it easier for you. So this is something that we can expect the price to do until it reverses back and goes back up again. Now these are things that can happen, and this is something that we need to be aware of. Now, this is one way of looking at it. So what is the other way of looking at it? I'm going to remove this right now here so that I'm going to get out of this and particularly remove all of this and give you some. So we are going to keep these red spots to tell us, and we can also remove these to tell us what the extremities are and how we can trade. Now, let us drill down to the weekly and see what the weekly is offering us, right? Let's go down to the weekly and see what the weekly is offering us. So here what you see is that on the weekly, we are somewhere near the 100. This is the 100 moving average, I guess. Let me check. So this is the, this is the 100 moving average. And this is where we have broken out. And this is the 200 moving average on the weekly, which is where we can come down to. Having crossed below the 100, this is the next target, which is 200 moving average. But what we have here is on the weekly, we have a beautiful fair value gap here. So it should give us some kind of support, this fair value gap. The only problem with this fair value gap here is that the last time the fair value gap was visited, it has eaten away half the area of the fair value gap. So the resistance, so the support on this particular fair value gap is partially reduced because the last time it traveled in, it did a beautiful reversal back in. So that's one. So this shows that there's some pending orders here, but these pending orders, most of them have been eaten away, and there's still some very small area left. So this is not very good reading on the NASDAQ. This doesn't give me a lot of confidence. One negative, that the old last time that was visited, it went down, and then we have a lower fair value gap here, which again was visited partially. So if you see here, not only has this fair value gap been eaten up a lot, but when you go back down, you see this particular fair value gap, and you see that even this one has been taken away. So I'm going to stretch it right up to here. This one also has been taken away partially. This did give a reaction, beautiful reaction, but this looks like this also has been partially eaten up. The other thing is, but next time after having been eaten to this extent, last time it visited, this was a red hot iron and it went right up. But this time when it's coming in, you're seeing that this is a very sharp fall, and we haven't, at least at the end of the week on Friday, not taken that beautiful jump which we saw on in the month of August. We did not see that. So, well, this candle is still not closed. This candle is still in the early formation of the week. So the week is ended. Sorry, it's not monthly candles. The week has ended, and we have not seen this beautiful, the kind of reversal that we saw here. But still, we cannot rule out anything at this point of time because we need to see the reactions here and figure out what's happening. So I will not want to make a conclusion as to whether we are going to reverse from here uh, on Monday in the next week, but that's the sign that we need to look at. So this is the reading on the weekly, right? And we are having 100 EMA, which has been breached, and the 200 DMA, weekly DMA, is somewhere around 16,209, which is close to another 1,300 points on the way down. So this is something that we should be, open to look at. And this is exactly where the last breakout took place. So this is a very important level for me on the chart. So I'm going to mark this out. And given the current scenario on the monthly and the weekly, and looking at the 200 weekly exponential moving average, 16,100 or 16,000 seems very, very possible to hit on the NASDAQ. Now, this is not something that I wanted to see on the chart for the sake of whatever is happening, but this is what I see, and this is what I share with you. Now, let's go to the daily and see if there's anything else that we can look at which can give us some more cues for the coming week, is what we should be able to find out when we look at the daily. So on the daily, interestingly, we are way below the 200 average. Let me run a check again here. I am not sure whether we're actually plotting it right, but yeah, we are plotting it right. So on the daily, we definitely are below the 200 DMA, EMA, and we have taken a big slide. Now, the only saving grace is that we are at the bottom end of the value area low. And this is an important area to, if at all we see a reversal like we saw last time, this can take us back in. And then I would be very, very confident of at least getting to this area, which is the point of control, which should give me the relief that I'm looking at to get out of my current longs, if at all, if I have any. And then this uh, fair value gap. These two areas become important if we see a reversal, and these will be the first test that I will be looking on the long side before I can decide whether the price is going to move back up and take us from value area low back up to the value area high. This is what I am. In looking at the news, I don't think we're looking at a major fall. I think that we will see some kind of a reversal given the geopolitics that we are in, but I could be very wrong on my geopolitics because Trump is an unpredictable guy and he can do whatever he wants. So I'm looking for my optimistic side tells me that we should look for a bounce and head for 18,361 is our first target, which is the point of control that you see here, the red line. And the next target should be 18,794 if we cross above that. This is my reading for this particular chart as far as the NQ is concerned. Now, what I'm going to do is the video is going to get long. So if you want just to take NQ as your cue, you can stop the video here and understand my perspective and know what I'm trying to do with my assessments on what the market can do. But for people who want some more confirmation, I'm going to look at ES, which is the second major index on the American markets and try and see what's happening on the ES. Basically, that's what I want to see. And what I'm going to do here is I'm going to switch to monthly, but I want to let this happen. Come on board. Let me go to the monthly on the ES and see what do we have in store on that. So I'm going to zoom out on the ES and see what's happening. So again, like the NASDAQ, if I just zoom in, no major shakes. We are in the same boat as we were on the NASDAQ. What do we see? We are in a sideways pattern as far as the monthly is concerned, right? But here what you see is we've already come way below the sideways move. So let's see the contrasting difference between these two uh, so NASDAQ, let's look at NASDAQ and see where the NASDAQ gave us the formation on the monthly, right? It'll come on. Oh, it hasn't come on. Anyway, I'll give it to you. So the NASDAQ, when we saw the sideways move, I took it from here. No, I should have taken it from here. So that's the mistake that I'm making. I should have taken it from here. And this is where you get your NASDAQ levels at, right? And on the ES, what am I doing? I'm taking this level. So you see the difference between the ES and the NASDAQ. In the NASDAQ, so the tech has definitely fallen more. See, in NASDAQ, on the monthly, on the sideways move, you're at the value area low. But when you talk about the ES, you are not at the value area low, but you are below the value area low. I have taken the same measure. So this was the 1st of March. Okay, want me to take the 1st of Feb. Let's see, 1st of Feb. Let me take 1st of Feb. Does that change? Does not change anything. So if you see NASDAQ, I use the 1st of Feb as my reference point. In ES, when I switch it to my reference point as 1st of Feb, that's the month of February, as my starting point, you see that we have broken below the value area low, but on the NASDAQ, we haven't, we are yet at the value area low. Now, this is definitely some kind of a divergence on the monthly. And this tells us that the ES is weaker, the ES, the 500 index broader market is weaker than the NASDAQ, which is 100 stock, 100 stocks index, which is comprising mostly of the tech, and the ES is more broad-based. It has tech, and it has the other sectors also with it. So let us just look at this and see what's happening. So here you see that we did not see any excesses on the above side. So the pendulum on the ES is already stretching out of this particular move. Now, when this is stretching out of this particular move, there's a bigger chance of the pendulum reversing from here and taking us higher. That's my read. I could be wrong, but that's the read that I understand when I use the standard deviation model that I have been taught. So we have overextended on our value. Now, the other thing is that we could be moving into another phase in our markets. So what is in another phase in the markets? When we move an area of equilibrium, we generally go to another area of equilibrium. And when I go to the next area of equilibrium, what I see is I will be using my volume profile tool again to find out what was the lower level of equilibrium. And what I see is this is the sideways move that we were in before we moved into the next block of sideways consolidation on the monthly. And this is what I see. So I see this particular area as the next consolidation block, right? this is the next consolidation block that we can target. So if the market is essentially begun to move from the old phase, from the current consolidation that we see here, and if it wants to come lower, the next phase of consolidation will happen between these areas, which is going to bring the market down substantially, right? So just a moment, I have a call that I need to take. So maybe I'll ignore it. I'll ignore the call. Let me just ignore the call, yeah? I'll just hold on to the meeting for a minute. I'm so sorry, I'm back on the chart. So where did I leave? Yeah, I left saying that we are already below the value area that we had created on the monthly, weekly, whatever. The value doesn't change. And we have now moved down and we are hitting a fair value gap area on the weekly. And we have visited this fair value area gap, fair value gap area twice already. And the last time we visited, we went right deep into it and we managed to bounce back. So this was a good move out, but not necessarily that we'll receive it again, because the last time we came in, we took a sharp bounce from an area which was just above this fair value gap. So we had some major buying happening just before that. And what we've seen on this, so this is the monthly, right? On the monthly, we have seen that we've gone and touched this fair value area gap, and we went a little bit higher in the last week, which was the dying moments of the trading day on Friday, the last. So there's not much of a significance. This little wick on the bottom does not give you much of a significance. But looking at this weekly chart, what I'm seeing is that there is this beautiful formation of a high volume node here, which tells me that a lot of trading play has happened in this particular area. A lot of trading has happened. This is a crisp fall from here, and a lot of volume has been generated in this particular band, which I'm marking right now. I could change the color here, and maybe don't need to change the color actually. But yeah, this is something that I see that there's a spike in volume as the prices came here. And what does that spike mean for me? So on in the next week, if you see the prices falling and going below this level, which is I'll mark out the level for you, below this level of 5075 and sustaining below it, I'm pretty sure that the next target is going to be this particular level, which is the proximal line of the lower fair value gap on the weekly, which is going to be 4882. So we could see a sharp 200-point fall if we open and sustain below this 5075 level on the weekly time frame on Monday. So on Monday, if we sustain below 5075, guys, I think that 4882 is on the way. Now, this is a virgin POC, and we did visit it once. Very, very smoothly, and there's definitely some buying orders that are pending here. So this is an important level to watch. The last time the markets came here, they gave you a seriously good bounce. So this is an area of good influence. So I am willing to wait for this 5075 to breach and then go in for my shorts to target 482. And if I see a long coming in here, this is going to be some area of resistance. Now this is going to be some area of resistance because a low value node, this could act as a resistance, or it could also act like an area which does not give you a lot of movement. Why? Because this is a low value node, and when you go to a low value node, generally what happens is either the price swishes by, or it will just, I'm wondering why. Okay, yeah, I'm getting it here now. So this is going to act like some kind of a resistance, this particular line. But if it doesn't act as a resistance, the price will go up and we will hit this particular low value area, low value area, low level, which is going to be the first target on the top side. So this is going to be my first target on the reversal up. And if you see here, once we reverse up, Again, we have a shallow area here, which is something that will attract prices, and then it'll lead us to this level, which is the point of control. Now I'm going a little bit into the future here. If you see a reversal, then these are the things that you should be targeting, because these will definitely attract price like a magnet. And on the way up, we will be looking at 5634 if we breach 5339 on the top side. So this is looking at a scenario where we are building a roadmap as to what can happen. So let me use a trajectory on the bullish side first. I'm a little inclined on the bullish side because I want my portfolio to go green. So we could just be heading here and taking a brief move up here, take some kind of a resistance, go back up, cross this, maybe do some little dilly-dallying on this area, and take some support here, and then probably move this. So that this is my bullish scenario. I want to be bullish as a positive person. I want to be bullish, and on my negative side of things, if I see the market breaking down, we could probably see some kind of a reversal back into this zone. I'll mark out the level for you, and then we could see a drop down, and this could be my first target. I could breach this, and then it could lead me down lower to 4628, which is something which I see as the next level where the market will go. On the higher time frames, the markets that are the levels that attract prices are the ones that I'm going to follow. So these are the two trajectories on the short side and on the long side. Now there could be a third trajectory which could give us some kind of a sideways consolidation before we decide to do either of the move on the upside and the downside. So this is going to be my sideways consolidation area trajectory for the next set of moves. We could do this little bit of a move before we decide to go up. So these are the scenarios that I think we are headed for as far as the ES is concerned on the weekly. Now, just to make a little more crystal, let's go down to the daily and see if these trajectories that I've made make sense. Okay. So looking at what's happening on the weekly time frame, what I'm going to do is I have already got my volume profile marked. I'm going to hide it for a moment and see what are the levels. So this you see is a beautiful spike down, and generally when these kind of big moves happen, there is some kind of a consolidation back up, because whoever has made a huge neat profit after the fall from this level that you see here, he's sitting on a lot of profit and he's bound to book some profits. It's a clean 465-point move, which is huge when you talk about ES. It's really huge. It's 8% fall in a very short time. And when you see these kind of falls, you generally see a blip back up. So let me just give you a perspective here. There was a measured move that happened in hindsight, beautiful move. Look at this move here. Okay. And generally the markets move in a measured direction. I'm just going to clone this and bring it down. It matches up perfectly, and we are close to that measured move here, and we are up for a beautiful reversal that should take us back up to somewhere close to 5,339 in my thoughts. And if you're sitting on some losses and if you want to get out of the market, if your risk strategy tells you that you need to get out of the market, 5,400, 5,300, 5,340 is a good level to probably hold on to your whatever longs you have on your portfolio if you're not very optimistic, and get out of that relief rally. And if you really want to still give it time, wait for what happens at 5,340 and then decide whether you want to get rid of your portfolios if you're expecting the markets to fall given the current panic situation. You don't need to sell out right now, is what I'm trying to tell you right now. We can expect a relief rally at this given point of time, is what I think is in order. So this is my reading on the NASDAQ and on the ES on the US markets. This is the trajectory that I see that the market can take. Specifically on the ES, I could have done the same thing on the NASDAQ, but the video can get stretched. It can get longer. So I, at the moment, would just, want to do this understanding with you. This is what I see on the markets. There is a lot of panic in the markets, and people generally lose money when they panic. So I want you not to panic. You are sitting on a loss. Yes, I mean, I'm getting calls from people who I speak to regularly and who trade under my mentorship, and they are questioning whether they should stick in the market or they should just get out and book all the losses, because there's a lot of talk in the media about recession and things and everything. All this is nothing else but fear mongering, and that's what Mr. Trump does. He creates these moves. These are moves that have been created. He's a disruptor, and he's creating these moves. He will want the market to go higher. Remember, he's been backed. He's a wealthy man, and he's got huge connections, and he's an intelligent man. To get where he is right now, you need to have intelligence. You need to have thought process. Just don't reach there. For everybody, he may just be a guy who talks, and doesn't he doesn't talk. He doesn't think when he talks, but understand the man behind the entire thing. This guy's achieved so much. How many presidents of the US have had the second term? Just go back to history. This guy has got something in him, and people trust him. But at the end of the day, everybody's selfish, and he is selfish too. And there are people behind him, and those are the people who are causing the problems that we're seeing in the markets today. They're disruptors. They cannot make money unless people who are holding positions and give away their positions. They will make money only if your positions go away and they get a good entry back to take them higher. They're not looking at small profits. They're not looking at a 5-10% gain on their portfolios. They're looking at massive gains to make things work for them. And my feeling is that this is panic, and people who ride out this panic are the ones who are going to really benefit out of this. No markets are going to remain low for a very long time, and the fall is always swift. And don't even look at the very larger scheme of things. Look at the immediate perspective. There is bound to be profit booking. We've seen a 7 to 8% drop in the markets in a matter of days. Now, to digest that particular move, there has to be some kind of a move up, back up, because there's nothing wrong in the markets. This is a disruption. The world can live without United States. It's not that the world cannot live without United States. It's not as worse as the COVID period. COVID was worse because it is affecting the entire globe. Here, yes, the globe has been affected, but I mean, 70% or 80% of the trade in the world still is away from the US. And how can a single country having 20% market share dictate everything that's happening in the world? Sooner or later, we are going to move out of this imbalance that has been created by this news and get back to some kind of balance. That's the law of the nature. And we got to understand that and not panic. Wait up, and you will get a better price even if you want to exit. You cannot exit right now, is my point. And once you reach that level on the ES of 5,340 is when you can decide whether you want to stay in the market or cover your losses and wait for a better day to get back into the markets. That's my piece of advice to you. So if you have understood this, my message is don't panic and try to take a rational decision based on the technical analysis that I've given you. And if this helps you, give me a like, share, cool your nerves. Don't just panic and get out of the market is my cue on this video. Thanks a lot. Look forward to being with you in the next one. Thank you.